The S&P tech sector is still pacing the rest of the S&P 500 this year, and what is going to be the 11th year of outperformance in the past 12. That is the market. So we use that as an excuse to take a look back in history. Back in history at one of the key moments in the formation of this rally. August 19th, 2020, that was the day Apple's market capitalization passed $2 trillion, the first stock to ever surpass that level. And while it took 38 years to reach that first $1 trillion in value, that next $1 trillion only took 2 years. It was aided, of course, by the pandemic sell-off that helped. But it also was aided by Tim Cook's management savvy and just a shift in the way investors were thinking about the company and the tech sector overall. Now, Apple's market value on this day in history, back in 2020, it almost matched the entire index of the Russell 2000 small cap stocks. And then back on this day, we saw so many headlines, so much hand-wringing about whether those valuations were justified. Headlines screaming that only 6 stocks were responsible collectively for most of the gains that we saw in the broader market for that year, up 40% as a group, just 6 stocks, while the S&P was down 4% when you exclude those 6 stocks. Not much has changed since. Apple now has a $3 trillion valuation. So too does Microsoft, and Nvidia, of course, is north of $4 trillion. And like in 2020, this broad market rally is anything, well, but broad. Just 5 stocks, all tech stocks, account for more than half of the market gains. 300 points of the 500 points added to the S&P so far this year. While the extreme concentration rivals the 1998 dot-com bubble, unlike 1998, those 5 stocks, along with 3 or 4 others to be sure, make up the lion's share of profit growth for the market as a whole. And maybe that's why some are betting that today's sell-off is just a mere bump in the road rather than some sort of wholesale about face.